Hi guys, it's Stock Curry, and in today's video I'm going to talk about what to expect when the Fed meeting minutes are released on Wednesday, as well as how to trade them, and we've got to talk about what certain members of the Fed said on Tuesday. So let's get into it! Alright, before I get into what the Fed actually said, I've got to go over the markets. All of the indices were down on Tuesday, with the Nasdaq being the worst hit, with it being down over 2%. As you might recall in Tuesday's video, I talked about how the rise in the market just did not make sense, and how the market was basically pricing in perfection for the Fed meeting minutes coming out on Wednesday. Well, certain members of the Fed came out on Tuesday and spoke, and what they said obviously tanked the markets. Now, Fed Governor Brainard is considered one of the more dovish members at the Federal Reserve. Dovish meaning that she's less likely to raise interest rates. And she said on Tuesday that the central bank could start reducing its balance sheet as soon as May and would be doing so at a rapid pace. Now, what this means is, aside from the interest rate hikes, the Fed also holds a massive amount of bond assets, mainly in mortgages. So when the Fed starts to sell off these mortgage bonds, that causes the interest rates on mortgages to rise. Now, as mortgage interest rates rise, that trickles down to the rest of the economy. While it slows down the housing market at first, it will trickle down to the rest of the economy, slow down the economy, and it's another way that the Fed can fight rising inflation without just straight up raising interest rates. Now, these statements are significant because up until now, the Fed has shown no indication of actually selling their bond assets. So if they start doing that, especially if they do that at the May meeting, that will come a lot faster than people expected, and that obviously will have a serious negative effect on the stock market, starting with housing stocks. Now, in addition to that, Brainard also indicated that interest rate hikes could come at a more aggressive pace than the typical increments of 0.25 percentage points. Now, that's also significant because so far the Fed has been very dovish, pointing to only a 25 basis point rate hike at each of their next meetings. And now Brainard, one of the most dovish members on the Fed, is coming out and saying, no, we actually need more than that. So the fact that a dovish Fed member, meaning dovish, she doesn't want to raise interest rates, she doesn't want to attack, she's afraid of a recession. The fact that she is coming out and being hawkish, meaning that she wants to be aggressive, she wants to raise interest rates, she wants to sell the bonds in the mortgage industry, which will raise interest rates on mortgages. She's willing to do all of this. That points to the entire Fed becoming a lot more hawkish. And it wasn't just Brainard. Mary Daly also spoke Tuesday, emphasizing the central bank's commitment to fighting inflation through higher interest rates. While Brainard said it is of paramount importance to get inflation down, Daly added that raising interest rates would be necessary in order to get inflation down, regardless of whether prices go higher or not. So here on Tuesday, we had two dovish Fed members who in the past have been unwilling to raise interest rates that much, both coming out as hawkish, saying that they need to raise interest rates more aggressively and maybe even sell bond assets to raise interest rates in the mortgage market as well. Now, this caused the 10-year Treasury yield to hit its highest level since 2019. And the 10-year Treasury yield rising is one of the reasons why the Nasdaq was hit harder than the rest of the market today, because as interest rates rise, this tends to hurt tech stocks more than pretty much any other industry. And of course, it's the Nasdaq that is tech heavy. Now, what does all of this mean for Wednesday? Well, so far we have two Fed members coming out as hawkish, which were previously dovish. Now, that's just two. There's actually a number of people who vote on the Fed. As we've seen in past times when certain members of the Fed have come out as hawkish, when the Fed meetings came out, they were actually kind of neutral and people were like, yeah, okay, whatever. And the markets kind of rebounded and brushed it off. So we really have to wait until the Fed meeting minutes come out on Wednesday to see if this more hawkish stance is going to be collaborated, meaning more Fed members were actually hawkish, but maybe they held off on raising interest rates or selling bond assets due to concerns about the war in Ukraine, or if this Fed meeting is going to come out and it's going to say, you know what, we really don't see that. These are just two outliers as far as these Fed members. In reality, pretty much everybody at the Fed is in agreement that they really don't need to raise interest rates and inflation's going to fix itself. So we really have to see what the Fed meeting minutes have to say. Now, if the Fed meeting minutes come out and they say, you know what, we're really not concerned about inflation, we think it's going to fix itself, we can just do these 0.25% rate hikes and we're going to be just fine, then most likely we're going to see the market rise on Wednesday. But if the Fed meeting minutes come out on Wednesday and they confirm what these Fed members are saying, that they really need to be more hawkish, they just held off on one meeting due to their concerns about the war in Ukraine, then we could see the markets continue a downturn and essentially continue the bear market that started back in January. So it's really going to be important to watch the Fed meeting minutes on Wednesday to see which way they go. Now, if you're wondering what time they come out at 2 p.m. Eastern time, okay? So it's about 2 hours before the market closes. This is not a morning thing. So I would not be surprised to see the markets mostly trade flat throughout the day on Wednesday, leading up to the Fed meeting minutes, or possibly trade down as sort of a continuation from today in expectation of this Fed meeting minutes being bad. Either way, I don't think we're going to go up tomorrow. I think we either trade flat on Wednesday or we go down on Wednesday. And then we kind of see at 2 p.m. Eastern time what the Fed meeting minutes have to say. Now, this is not going to be something where we have to get the Fed meeting minutes and then analyze them and kind of see where the market goes. The media and the news, they are going to get the Fed meeting minutes early. So if you just watch CNBC right at 2 p.m., CNBC is going to release their summary of the Fed meeting minutes. So you can just get the alerts on CNBC and immediately know what's going to happen. Of course, at the same time, you'll see it in the markets. Right at 2 p.m., the markets are either going to take off or they're going to crash. And so definitely just keep your eyes on the market at 2 p.m. because everything is going to change at 2 p.m. on Wednesday. Now, how to trade it? Well, I think the best way probably is just keep some cash on the sidelines and then right at 2 p.m., call options or put options, depending upon which way the market moves. Because I do think this is going to be a significant market mover. I do not think this is going to be a nothing burger like the last Fed meeting minutes were. I think this one's going to move the markets. Now, I could be totally wrong. We could have the Fed meeting minutes come out and the market's like, whatever, and just trades flat. But I personally don't think that's going to happen. Again, I could be wrong. I've been wrong in the past. You guys saw my video yesterday. I was very wrong on my trades and I lost quite a bit of money yesterday. Now, the good news is with the markets coming down today, since most of my positions were bearish, I made a lot of that money back. Not all of it, but most of it. I actually sold my Apple put options that I bought yesterday for a 36% overnight profit. So that was a big win for me today. It was really nice to close those out and take a nice profit on those. So 36% overnight profit. By the way, guys, if you want to know everything I buy and sell, there's two ways you can find that information out. One is you just follow me on Twitter at twitter.com/realscottcurry. I post all of my trade alerts on Twitter within minutes of the trades being filled. The only thing about that is you're not going to find out about the trades ahead of time. And also, there's not enough room on Twitter to kind of explain why I am buying and selling certain assets. So if you want additional information besides just, okay, what happened, on the VIP Discord, I actually go through and I explain why I'm buying and selling certain trades and when I plan on exiting those trades. I post my trades before they're filled because most of my trades are limit orders. So I will post, hey, I just placed this limit order, and it may be hours before it actually shows up on Twitter, before it actually fills. So if you want to know everything I'm buying and selling before the trades are filled, and more importantly, if you want to know why I'm buying and selling those stocks, so you whether know if you should jump in or not, then you can come join the VIP Discord. In the VIP Discord, I explain all of that. And if you're interested in that, you can sign up at stockcurry.vip/getvip. Again, stockcurry.vip/getvip. Now, I also want to get back to what Brainerd said today because this really hurt mortgage rates. Just the thought of the Fed selling off their bond assets caused mortgage rates to rise, and the 30-year fixed mortgage crossed 5% for the first time since 2018. Now, actually, in 2018, it was only above 5% for 2 days. The last time it was above 5% and held above 5% was 2011. So except for those 2 days in 2018, the mortgage rates have not been this high in 11 years. Clearly, this is going to have a significant downturn on the markets. And people are talking a lot about these new home construction builds where you might go buy a house and you got to wait a year, maybe 2 years for that house to be built. Well, if you bought the house thinking you could afford a mortgage at a 3% interest rate, and now a year or two has passed and your interest rate's up to 5 or 6%, well, with double the interest rate, you may not be able to afford that house anymore. And so you might have to cancel your contract, and we could end up in a situation where we're left with a lot of new construction that goes unsold. And in a situation like that, that's certainly going to cause housing prices to come down as these home builders are forced to sell their new construction builds at lower rates just to sell them, to offload them. And that's what I think is going to happen. I think we're going to start to see that, as well as people being priced out of the market because they can no longer afford mortgage rates. And so all of this is going to cause housing prices to come down. Now, as housing prices come down, that is going to trickle through, have pretty significant effects on the economy. But in my experience, even housing prices falling, it tends to be a very slow thing. It tends to take years for that to really hit the stock market. Now, we're obviously already seeing it in housing stocks because the stock market is forward-looking. But as far as affecting the overall stock market and bringing the whole stock market down, I think it's going to take a couple of years, maybe 1 to 2 years out. So this is certainly going to be something that helps trigger a recession. But again, it's probably not going to happen for another year or two, but definitely something that we want to keep our eyes on and focus on in case it gets much worse. And certainly if the Fed starts selling off their bond assets and mortgage rates rise, this could get a lot worse a lot faster than I'm currently predicting. So something that we need to keep our eye on, but a little more future oriented. Now, the last thing I wanted to point out is actually some good news. I don't want to be a huge downer on this video. So there was good news that came out today. And the good news is that the Biden administration is expected to extend the payment pause for student loans through August. Now, currently, the student loan payment pause is expected to end at the end of this month. But President Biden is trying to extend it through August, and there's even talk of extending it longer than that. Essentially, what Democrats are trying to do right now is they're trying to extend the student loan pause long enough to work on some legislation for student loan forgiveness. Now, it's very unclear how much student loans might actually be forgiven. President Biden has thrown out the number of $10,000. Others have said just forgive all of it. So there's no telling it. Somewhere between $10,000 and 100%, who knows? But somewhere in there, if student loans are going to be forgiven. A lot of people are pushing for around a $50,000 forgiveness. Who knows? But Democrats are going to be working on this for a long time. This is not something where student loans are going to be forgiven next month. Most likely, they're not going to get any sort of legislation done by August. But they're really trying to get this done by November. Because with the economy going down and Democrats losing poll numbers, and it's looking like more and more Republicans are going to get elected in the midterms, Democrats are really trying to knock this out by November before elections so that they can get this big win and they can say, look, Americans, what we did for you, come vote for us for another 2 years, is essentially what the Democrats are trying to do. So that's why we have the Democrats really pushing to get these student loans forgiven. So I think the pause, even though President Biden is looking at extending it through August, I don't think legislation is going to get done by August, just because Congress has a very long track record of waiting till the very last second to do anything. So I really think that student loans are probably going to get extended through November, and then Congress at the last second, right before elections, is going to approve some sort of student loan forgiveness, and then payments are going to resume. So that's my prediction on that. But anyway, it's good news because this is essentially more stimulus. Again, the stimulus started back in the pandemic, starting back in March of 2020. So this kind of stimulus extending is actually good for the market. So it's going to help boost the markets because it increases people's buying power, which is good. It helps delay any sort of slowdown in the economy or recession. So this is the one bit of good news that did come out today. So despite all the Fed talk, we do have some good news. All right, guys, I'll leave you with that good news. I hope you enjoyed the video and got a lot out of it. Comment down below what you think is going to happen when the Fed meeting minutes are released Wednesday at 2 p.m. And I wanted to remind you also that Webull has extended their 5 free stocks worth up to $9,600 promotion for another few weeks. So if you're interested in that and you want to get 5 free stocks worth up to $9,600, all you have to do is sign up using my link in the description below and just deposit $1 into your account and you will get 5 free stocks worth up to $9,600. In addition, cryptocurrency trading is now available in all 50 states, including New York City. So if you are in New York and you want to trade cryptocurrencies, you can now do so on Webull. So if you want to take advantage of that, go ahead and sign up for Webull. Get your 5 free stocks worth up to $9,600. You also get $5 in free crypto when you make your first crypto trade. And once again, if you're not in the United States, or if you want to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a highly discounted trading platform, and they do have multi-leg options. So even if your broker does not, Interactive Brokers does. And so if you're interested in all of that, you can sign up for Interactive Brokers. I have a link for that in the description of this video as well. And of course, I do want to remind you there are material connections with both of those. So whenever you sign up for either one, not only are you getting a great broker to trade with, but you're also helping me to continue to have this channel going for you guys and continue to produce this great content for you. All right, guys, I hope you have a lot of success trading, and I will see you tomorrow.